Hey everybody, this is John. Welcome to the free video. Let's look at Twitter. Twitter is a good example of market versus open interest. So the market today was strong, and you can see that Twitter today actually had a pretty decent rally, hitting a high of nearly 51.90 before selling off into the close. And if we look at the Qs, you can see the Qs had a solid day closing at their highs. The question becomes, why didn't the Qs, or why didn't Twitter close at the highs if the Qs closed at their highs? And that's where we come back to open interest. And I call this open interest versus extreme open interest versus the market. So for Twitter, there's extreme, like way more at the $50 strike than any other option. Sometimes you'll see maybe there'll be some strikes and they all have, a lot, like with Apple, it'll be like 50,000 at one and 60,000 at the other. Well, those are similar. This is way more than any other strike by far, like 10 times more. And it becomes like an interesting magnet issue. And so on this, we sold those $51 calls. So far, so good. 51.53 call spread. And then the butterfly with the idea that if we pinned there, obviously all this would be great and we'd get max profit here. So the question just becomes, it's Twitter versus the market, okay? Or versus open interest. So open interest in Twitter versus the overall market, which at this point is strong, who's going to win out? And typically in something like this, extreme open interest can carry the day. So, and then today, Baidu, I had originally sold the 225 call credit spreads on this back down here. And then within the one standard deviation move was $4. Well, today, when it broke through $4 on high volume, it was time to get out of this, and got out of this at $3.35. So obviously lost money on it. But the idea was, how do you know when to get out of it? And that's when the volume explodes. And so the volume here, you can see if you looked at a 39-minute chart, it was just like for real. And a lot of this has to do with the Alibaba IPO. News came out that it's going to be priced at $68 a share, and then that kind of spurned the internet Chinese companies up. So Alibaba is expected to come out at $68 a share. That's the high end of its IPO, and that would give the company a market cap of $167.60 billion. So this is kind of like Facebook, where people always say, like, when Facebook came out at $40 and a lot of people wanted to buy it, but the market cap was 100 billion, and the question just becomes, where do you go from there? Do you go to 200 billion? Great, that it becomes a double. But a lot of times, people were talking about, Microsoft, if you put a $10,000 into it at the IPO, it's $3 million today. Well, Microsoft came public at $785 million in market cap. So when it did go to a $250 billion market cap, yeah, that was exponential. But if you started at 160 billion and go to 250 billion, yeah, that's a nice return, but it's not that. So just be aware of the market cap implications. So tomorrow, the big stocks are going to be to look at is Yahoo. Yahoo has a 40% stake in that, or large percent stake in that, and the question is what's going to happen around that too. So that'll be kind of the big news in the morning, and just to kind of see how that kind of dominates and plays out. And from there, it's really just going to be, we got triple witching and just looking to see where the markets and the indexes pan out. All right. You guys have a great night. Take a look at this. And so if you are interested in going to Vegas, just go to simpleoptions.com/Vegas, or just you can call us 512-266-8659. And that's our one live event of the year, October 12th through the 14th. And it's an awesome time. All right. That's the end of this. You guys have a great night, and we'll see you at the next one.